One of the nation's largest car dealerships, Group 1 Automotive, posted earlier this morning with earnings and sales topping expectations. Revenue grew 13% from last year to a record $4.7 billion, driven by record new vehicle and parts and services sales. U.S. vehicle retail sales increased 4.8%, with gross profit growing 4.5% over the prior year. Join us now with more on the challenges facing the auto industry. Daryl Kenningham, President and CEO for Group 1 Automotive. I can think of so many places to go with this, Daryl. It's such a bifurcated market, or at least seemed that way for a while, between used car sales and new car, and then you've got the whole EV transition, and what looks to be, after GM's comments yesterday, it just looks to be a tough thing to navigate for both, companies like yours and the OEMs.
Well, good morning, Joe. There's no shortage of variables out there right now. The one good thing that we're seeing is the customer seems to be holding up pretty well. We saw that in our results, as you mentioned, in parts and service. We're very strong again in the quarter, and our new car volumes were quite good. Industry SAR continues to improve. We're still understocked as an industry in many brands. The used car customer is still facing some uncertainty. Much of that is due to some affordability questions and interest rate pressures year over year. So that's the question mark that we're all trying to deal with and trying to put plans in place to address. So as a new car dealer, we have access to some sourcing opportunities that some of the used car pure plays don't have, and we feel like that was one of the reasons we delivered what we thought was a pretty good used car quarter as well.
The strike started at just a few places. It's been broadening. Where are you seeing the effects? And you said parts and services were positive. Will there come a time where you can't get parts? We're starting to see pressure on the parts supply chain, certainly. That's no secret. The good thing is we have 155 dealerships in the U.S. that we can rely on our inventories in total to try to service customers out of those inventories as well. But the parts impact will be felt more significantly and faster than the vehicle impact, to be honest with you. So we're trying to deal with that with our customers, and the OEMs are honestly doing a pretty good job, I think, trying to staff their parts distribution centers and keep parts flowing, because they know that affects customers right away and very quickly. Would you say, in terms of product mix, you got a bunch of pickup trucks going off the lot, you got big SUVs? Are they all a bunch of gas guzzling internal combustion engine cars? Is that where you're making all the money, Daryl?
Well, ICE is alive and well in the industry, I can tell you that. Our footprint is heavy southwestern United States, and the industry itself is still only about 7% EV. So there are still plenty of customers out there buying large SUVs and large pickup trucks. And honestly, I think that's why you saw the UAW this week targeted 2 plants that build exactly that. And so there's plenty of demand still for those kinds of vehicles in the U.S. for sure.
Daryl, if you were one of the big three, would you use these are pretty good times right now, would you use all those profits to affect the transition to EV? And will it be like throwing a big party and like 4 people show up?
Well, I think what you're seeing right now is some rationalization of EV planning. It's no secret.
I love that, Daryl. You got a McKinsey guy standing next to you. What are we doing? There's some rationalization of EV thing. What did you say? What is that?
They're pushing out their plans. Some of the
they're in
Detroit
stall mode. They're stalled. They broke down. They're on the side of the road.
EVs. Base supply on EVs is higher than it is on ICE vehicles. That's no secret. And so, yeah, certainly EVs are moving slower than ICE vehicles. That's no secret at all. And I think the Detroit Three are trying to adjust to that reality, and I think they're trying to revisit their investment assumptions on that. And those are big dollars, obviously. So
are people leasing, buying? If you're going off lease, should you buy the car, Daryl, because you can make more money than selling it yourself? Is it still like that?
Yeah, to some degree, because there's still some pressure on used car inventories. There's not enough used cars out there in the world, so we're seeing some of that. On the lease front, we're actually seeing leasing increase. We saw our lease penetration increase 50% year on year in the third quarter. So customers are coming back to the lease market. OEMs are supporting leasing to a little bit larger degree, and so I think you'll start to see more and more of that. Yeah, for sure, Joe.
So Daryl, tell me, and I haven't been updated lately, Phil would probably know, the average age of a car on the road today, has it come down? It used to be like, I mean, it portended great things for the industry.
Yep.
It's over 12 years.
Is it still?
Yeah.
It hasn't gotten any better?
No, it hasn't. It's still climbing, and there are average mileage driven is increasing. Our average miles driven through our service, the cars that come through our service drive, it's up 2,000 miles year over year, which means more service work, potential service work. And as we look out into the future, we think that miles driven only increases for consumers based on the trends that are out there and the use of fleets in the industry. So certainly, I don't see an end to that.